Welcome to the StockMiner.com studios. I'm your StockMiner Brian Johnson, and I keep hitting the refresh button on my Google Finance website here, but I can't get it to stop giving me red numbers. So I guess I'm going to have to assume that maybe we moved down today. I know, crazy. We don't get to talk about this very often. But yeah, the Bears made a move today. Wow. So we did see some levels broken. There were opportunities to take a little bit of some shorting opportunities. We saw one as we broke below this line here. I think my suggestion was actually closer down towards this area here for the more conservative. The more aggressive could have taken on a break here or a break below 11,000. That did hold by the end of the day. Notice that 11,000 did hold by the end of the day. And so this is what we've got. This big overhead blue line was broken once, but not for long. Came back in, tried to break above it, tested it. Very, very common to see this thing test and test. I had mentioned earlier in my videos too that, I don't always recommend it, but if you're going to take a speculative trade, this is the place to be doing it, at the top of these instead of in the middle of these things. You're just gambling otherwise. So more conservative traders should never try that, but if you're going to take some sort of a shot, if you're one of those I gotta call the top type people, this is where you want to be doing it. This finally paid off, but look at how many times it hit this line. 1, 2, 3, 4, 5 and up and over. 6, 7, 8 times. So it held for a very, very long time before we finally saw a move back to the downside. And we did start to break these levels. First time in a long time. And what else did we break? Told you guys to keep your eye on this. We broke the 50-period moving average. Yes. Wow. Lots of stuff broken today. Notice how after we broke it, we did come back to retest it. The 50 slash the 20 held very, very nicely in here. Continued our move down from there. So I want you guys to keep this in mind, that we are still watching these overhead moving averages. However, as for the time being, the Bears have actually made a move here. So we'll continue to watch these heavier levels down here. More conservative traders should be looking for breaks below this. And, depending on how quickly we move to the downside, be very careful of this 200 as well. It really started rising rapidly here in the last few days, and it's catching up to this line that I'm watching. So be careful on a break of this, that you don't forget about the 200 right below it. Still opportunities for trades there. Just want to be careful. And look ultimately what we hit. Most of the indices did this. I haven't checked the NASDAQ actually, but you can see we came back and tag the 20. Yep, that was why I was looking for a break more back below these levels, if at all possible, from a bigger swing trading standpoint. Didn't get it. We got a touch of it today. 10,920 is the green line, and the low today was 10,917. So pretty darn good on a 3-point touch here. That's really close. So it did come back, tag that 20. That is ultimately the next stronger level of lower support we will be watching. We'll get breaks below there. Now maybe we're talking about some bigger moves to the downside for the Bears. But I'm not going to tell you guys to start getting uber short yet. If you took some short positions, great and good for you. It's time to start looking at that. There's absolutely nothing wrong with that. But it's been only one day. It's been just one day. Everything confirmed. So I don't want to poo-poo this bear move at all, by any means. But I do want to tell you that one day does not a market make. I've said that before. I just made that. That's not really my thing. I'm sure somebody else has said that. But anyway, one day does not a market make. So we will take this for what it's worth. Nice, strong move by the Bears, confirmed by the internals. A good volume coming in on stocks today, especially the ones that were moving down. All kind of kicked off by some of the earnings that we got. We're going to talk about that in a little bit because you guys got to know it's coming here. All right. So anyway, moving on to the NASDAQ, you can see what happened here. And the NASDAQ, as strong as it is, had that big gap down today, ran up, kind of half filled this gap, only to pull right back, not going below where it gapped to start the day. Notice the strength here in the NASDAQ. I'm going to say it again for any new viewers I might have. Don't get wrapped up in, hey, this thing's up too far, so it's really got a long ways to move downwards. It doesn't work that way. So the NASDAQ, once again, still holding stronger than the rest of the indices. Even though for the day the NASDAQ was still down further than any of the other indices were, Point being, it's not really breaking any of these more major levels. Look at this strong blue line still holding once again today. We did see a duck below the 50-period moving average, but it hit this blue line and came right back up by the end of the day, holding 2040 to 2060 was a big area of resistance I had talked about on the way up, and now it's holding very nicely as support on the way down. We're back into and above that 2060 area. If you look at it on a daily, you can also see here, look at this huge climb up. Yeah, just a ginormous climb up here. Looking at moving back into around the 2150-ish area for this next bigger level of overhead resistance. Move down, decent move down today in the NASDAQ, but nothing's really broken from the bull side here, at least from a NASDAQ standpoint. And holding above this overline. Remember, we had the big move up. I said this above 2060 is where they're going to want to hold this thing if you're a bull. If it's a bear, it wanted to keep it below it. Couldn't do it last week. Closed above it, and now look what the bulls are doing. They're holding on to this level so far. Now, we're 2 days into it, but as it is right now, holding nicely to that overhead resistance. SPX on a 60 also playing around with this blue line. Above it, then below it, then above it. Now the gap down took us below it to retest this area here. Break back up, retest the blue line, come back down. If you took any trades below the 50-period moving average, you may have been in a teeny bit of pain. It really wasn't much. It's 2 points, big deal. But a little bit of pain as it came back up. You might have been wondering, oh boy, here we go. Bull's going to buy back in. But then we got the break to the downside. We can count this 1,000 different ways in Elliott Wave. We could have finished an A, B, C correction, which means we could see a little bit of a bounce coming into the middle of the week. This could be the start of some sort of a three-wave down. Whatever. You can count this a million different ways. But overall, point being, we finally broke some more major support down here. Breaks of this area right here were good places to get short. By the end of the day, the bull's dead, bought it back up again. But you can see what basically happened was we got right down here into the 1160 area, only to find ourselves right back up to retest this area, and so far holding this area. If it'll stay below this area, that's good for the bears. That's exactly what the bears want to do. Finally broke an area of support. Wow. And now they want to hold it. Let's see if they can do it. Let's see if they've got enough strength to hold that coming into tomorrow. Here is the move down, just about getting to that 20-day moving average. As you can see here, we came within about, 3 points? Yeah, that's right, about 3 points of hitting the 20-day. So very close to testing the 20-day after the move back down and below the 1170-ish area. 1165 I think was my more aggressive short for you guys, and then to watch the 20. Never really quite made the 20. But we could, if we see some sustained selling come in, definitely make this area below that 1150 area I still like as a more conservative short for you people looking to maybe still take this thing down a little ways. From a weekly, we're just still basing sideways here. Won't talk much about it. It is only Tuesday. And here is the VIX. VIX was up considerably today, but still trapped within this big falling wedge we've been watching. It's below all these moving averages. There's all kinds of resistance above it. More major breaks really back into here are when we're going to start to see the pain come into the market, the fear come into the market, and that's going to and should kick off a much larger move down within the indices. From a weekly 2 coming right back up to retest this line. We broke it last week, and then now we're back up to it. We're just bouncing around. Point being, there's fear coming in. 8.4% is certainly nothing to scoff at. But overall, bigger picture, guys. Let's look at the big picture, and that's what weeklies allow us to do, and that is this. There's just no fear there yet. Not yet. Apple on a 60. Now, there was somebody I knew, I can't remember who it was, but I had been watching his videos for a while, and he kept saying this whole time, don't hold over earnings. I don't recommend you hold over earnings. Holding over earnings is gambling. You just never know which way it's going to go. I even talked to some people that wrote me about it, and I always tell everybody the same thing. I just don't hold over earnings. And anyway, point being, this was a great illustration for you. This blue line stinks. Stock charts it's just screwed up. But anyway, point being, look at this. What did Apple do? They crushed. I don't mean just crushed. I mean destroyed earnings. They were up like 70% or something ridiculously disgusting like that. And what happened? They dropped 5% in the overall, 6% or so in the overall market, retesting that 300 level. this morning. Got a huge bounce up here. Manna from heaven for anybody that held over earnings up in here. They got an excellent opportunity to get back out sometime today. Some may still be holding. And maybe this does continue upwards, but I'll tell you what, you don't always get that lucky. This is why I do not hold over earnings. Now, in this case, I would have been long this stock. I would have been out yesterday. I would have been looking to get back in today. And when I would have seen my entry for a long, I would have got back in and probably been able to buy back around the 305 mark and hold it all day long for another big profit. If this thing would have gapped up to 340, then everybody would have been, oh yeah, I'm so glad I held. But, I mean, how many puckered butts were there this morning when they woke up to find Apple had gapped down, not up, even after crushing earnings? This is why I don't hold over earnings. This is a great lesson right here. Typically, Apple does gap up after earnings are reported, but you can never be sure what's going to happen. What a perfect example. Good forward guidance, crushed earnings by 70% and went down. I don't know what else you're going to get out of a stock. This is a perfect example of why you shouldn't hold over earnings. It's very, very, unless you're in it for the long haul, you're going to be holding for the next 6 months or a year or whatever, then that's a whole different story. But if you're going to trade it for a day or a couple of days or a week or whatever, man, got to be so careful. Anyway, point being now, we have seen a pullback here in Apple, moving itself back up. It's any direction for it right now. I told you that I think it may have finished could potentially have finished a move to the upside here on the if you want to count it out Elliott wave wise, doesn't really matter. Anyway, anything back above 320, still bullish for Apple. That's another good place if you're not long Apple already. Back above 320 is another good chance to do it. Watch the 295-ish area now with the 20-day down here. Watch 300 and watch 295. Those are your big marks in the sand to be watching. Overall weekly with the gap down and that big move back up, still nothing really broken in Apple yet. Nothing really broken. So you guys at held, still doing okay. Haven't seen it crash. FAS was down. You can see what we're doing here. We're just consolidating sideways. We had a little bit of a fake push up, only to be brought right back down again. Overall, nothing to talk about on FAS and nothing to talk about on FAZ. Saw a retest of the 200 here as it did try to make a climb today, only to see it finish right at that 20-day moving average, and that was one of my bigger areas. I really like breaks above here. If you guys are going to get long and maybe hold overnight, this would be the place to do it when it breaks and closes above this blue line. All right, that'll do it for today's video. I'll be back with you again, obviously, tomorrow. Now, if you're not catching any of this move to the downside, if you don't know how to short, oh man, you are missing out. Do you see why I love being able to short the market as well as go long? You just never know when it's going to decide to turn around. And when it does, a lot of times you get these big fat red candles to the downside and a great, great, great opportunity to make money. If you do not know how to short, get a hold of me. Take the mentoring course. Get it over with and start making money. Start becoming consistently profitable in your trading. It's time. And the way to do that is to play both sides of the ball. You can't just play offense and make a good living at football. If you're a coach, you got to be able to play offense and defense. Otherwise, it just doesn't work. You've got to be able to go long, and you've got to know how to go short the market. You've got to know how to do it both ways if you want to be consistently profitable and make good profits in the market. You can't just do it going one direction. It doesn't work that way. So give me a holler. Let me know. Let's talk about it, and I will talk to you guys regardless tomorrow again. Bye.